Good evening, ladies and gentlemen, and welcome to the show. Today is Wednesday the 13th of November, and you know what? I wanted to talk a little bit about the market right now. And what I see as upside potential and downside risk. When you invest in anything, you take a risk. Now, I'm not going to give you guys investment advice because I'm not an investment advisor, but I'm going to tell you a few things that what's my opinion about all of this. You know, the global stock markets have been pumped up on 11 years of 0% interest rate policies. And, you know, the Fed did get its interest rate up, but now they're dropping it back down again. And they've slowed off now. They've taken a break, but they're going to have to go back to it if they want to keep the market liquid. They've been injecting money by various means to prop up and support these markets. Markets always want to find fair market value. And so it's like if you stretch an elastic band, the elastic band's going to want to go back to its original shape again. And if you compress a spring is going to want to bounce back to its original shape again. So it's going to be constantly exerting pressure. And that's the way with the market right now. The market right now is like an elastic band that's been stretched and it wants to go back. They're keeping it stretched by artificial means. But so your upside potential, yes, the markets might go up a little bit more. But the downside risk is these markets could overnight or in a few weeks. I say overnight, but I'm talking about in a few weeks, they could lose 40%. And that's your downside risk. What is your upside potential? So maybe it's 5%. I don't know. But is it worth taking a 40% loss, risking a 40% loss for a 5% gain? See, that's your downside risk and upside potential. Now, what I'm going to talk about is silver right now. And so what we're going to do is we're going to start the charts right here, and we're going to take a look at silver today. Now, what I want to talk to you guys about is downside risk and upside potential for silver and gold. Why the downside risk is limited here on silver. And we see a pretty good little day today for silver. It's up 18 cents. Silver and gold have not made their move yet, in my opinion. Now, I know a lot of in the financial system, an awful lot of people are thinking right now that they missed the boat, and silver and gold went up to like $19.20, and gold was like $15.55 or something like that. And now they've settled back down. Silver's back down to $16.91, and gold is let me just check gold real quick. Gold is at $14.63, and so people think, oh, we've missed the boat. Well, the downside risk for gold and for silver, it costs these miners for an ounce of gold to get it out of the ground. It costs these miners over $1,000. Even the miners who have a cheap production costs and everything, when they figure they're all in costs, by the time they get it into a coin or bar form, you want to buy it, you know, it's like $10, $11, $1,200 depending on the mine, you know. And with silver, it's above $10. Some mines cost as much as $14. Some mines can do it for like $9, you know, but they have to keep really, they have to have, it has to be a very productive mine to get it down to like $9 all in cost. And so your downside risk potential for silver and gold is set at the mining production cost. Because if they go below that mining production cost, there's going to be a shortage on gold and silver. I mean, it's a no-brainer. A lot of people out there, they don't think about where does the gold and silver come from. When you go to buy an ounce of silver, where does it actually come from? It comes from a mine. That's where it comes from. It doesn't come from the tooth fairy. So, that's your downside risk. Silver could go down to around $10, an ultimate downside risk, and gold could probably go down to maybe $1,100. That's downside risk. But it's not the same downside risk you could see in the stock market with a big crash. It's an awful lot larger downside risk. And let's take a look at cryptocurrencies and talk about Bitcoin and Ethereum and these different XRP and different cryptocurrencies. The downside risk on cryptocurrencies is, in my opinion, larger than the downside risk on gold and silver. But, the upside potential on cryptocurrencies could be absolutely massive. Because this is a new technology and it solves the age-old double spending problem. And it's taking off. It's starting to get root in the economy, and it's becoming a very more accepted form of investment. There was a time when only geeks and stuff, Bitcoins were like $2 a piece or whatever, and not many people knew about them. It's spread so much bigger now, and it's so much more accepted within the financial community now at this point as an investment. And, and the longer Bitcoin holds these stable prices up above $8,000, the longer it stays up there, the more accepted it's going to be in the financial world. And we're seeing less volatility than we used to. Even when Bitcoin becomes volatile now, I don't see the volatility I used to see back when it was $1,000. Massive volatility. It could drop from $1,000 down to $400 and then bounce back up to $600, and it's all over the place. Now it's I'm watching it. I'm seeing how much more stable it is now than it used to be. It's incredibly more stable than it used to be. In fact, I look at back around 2013, 2014 as the good old days like the Wild West of cryptocurrency. Just like the Wild West in the United States was tamed, cryptocurrency at a certain point is going to become tamed. The volatility is going to disappear. And things like Backed is really getting in there now and starting to get institutional investors are starting to come on board. When we see that, we're seeing that it's starting to open up into a new huge marketplace. Cryptocurrency is starting just on the edge, just on the early cusp of coming to age, it's starting to mature, but there's still a great downside risk potential for cryptocurrencies. It doesn't exist as much. My point is it doesn't exist as much in the precious metals. But the upside potential for cryptocurrencies, I see it as being much greater than the metals. Not to say that there's no upside potential in the metals. I think there's going to be a tremendous upside potential in the metals. But I think that it could be that tremendous upside potential in the precious metals could be small compared to the upside potential in cryptocurrencies. When we look at it in the future and measure it, and it's like the precious metals might go up 20 times the price they are now, and cryptocurrencies could go up like way more than that, hundreds of times, So we're seeing that's what we're seeing in this. Now I see the riskiest place to be right now is anywhere that deals in assets that are in some way connected to the dollar or the other fiat currencies, which is most of the stuff out there except for cryptocurrencies, gold and silver. Okay, so let's look at this article. Only Bitcoin, Ethereum, and XRP and a few top cryptos have credible liquidity to be good investments. Tell you what I think of that. I think that's a bunch of rubbish. I think you're going to see when Bitcoin finally does start to take off. Now, I can't tell you exactly what moment that's going to be in the future. All I can tell you is at a certain point, this is going to take off. When you see Bitcoin take off, you're going to see all of the cryptocurrencies, most of them, you're going to see them take off too. Because what it is Bitcoin it's like a giant circus tent. And Bitcoin is that center pole. Like any tent, when you pull the center pole up, the rest of the tent goes up with it. That's the way with Bitcoin. Bitcoin starts to go up, all of the other coins are going to go up with it. And some are going to go up to more of a degree than others. Generally speaking, it's your top coins that are going to go up the best. But some of these altcoins are going to move up in position. And if you can pick the ones that are down on the list that are going to move up in position when Bitcoin goes up, then you can make even greater gains. But there's the thing, guys. If you're a real cryptocurrency investor, what you want to do is you want to do your homework to find out which coins are the positive ones that are down on the list that will move up massively when the rally comes back or returns. And so, yes, they can be very good investments indeed. He says that they don't have credibility to be a good investment. I say that's nonsense. I say altcoins, if you really know what you're doing and you really do your homework, they can buy you that new car you dreamed of. You know what I mean? So he says liquidity is essential to the ability to convert your cryptocurrency or asset into cash quickly, without the price fluctuating too much. Liquidity can be an important factor when investing in anything. So here we go, guys. We're on the final countdown right now to when the rally really begins in cryptocurrency. But we could go through a bear first before we get there. The deeper that bear is, if we go through a bear market, like if the cryptocurrency industry goes bearish and we see the prices dive down, the lower they go, the higher they're going to go on the other end. I want you guys to remember that. They're not going to die. That's not what's going to happen. But the lower they go, the better of a buying opportunity it's going to create for you, because the higher they're going to go on the other end. And so your potential gains are going to be greater. Now, if you're sitting on this end and you bought cryptocurrency already and you paid a lot for it, and the price goes down, you're only going to take that loss if you sell. If you ride it through, an HODL all the way through until it goes back up again, once it goes back up higher than your entry point, well then you might as well just forget about everything that happened in the middle. You know? Because you didn't sell, you hung on to it, and now it's up higher than when you purchased it. You're laughing. Listen, thank you guys for listening to my show. Give me a thumbs up. We'll catch you guys in the very next episode. Bye-bye.